This shows the low 350s as our primary overhead ceiling of resistance that can contain monthly buying pressures. We actually spent 2 or 3 weeks testing it, but we did not close above this area on a weekly basis, which is critical for longer term buy signal. Had we closed above the 350-369 2-year channel top, that would have indicated or set up 516.05 by the end of the year. But instead, what it did was provide a sell opportunity or short sale opportunity for this rising channel bottom, presently at 295.18. This rising 3-month structure, we've mentioned how it could contain weekly selling pressures, and from there, 2 to 3 week swing traders could go long back into the low 350s again, because that would be the big picture likelihood. Now, we have stalled out along the way, as we mentioned, as a session containment level at 331.61. 331.61 is nothing more than a 5/8 upside Fibonacci from that late May high to the more recent early June low. We've mentioned how it can contain daily buying pressures and how below which you could anticipate perhaps a retest of the 295.18 3-month channel bottom. On the way down, we still have 309.31 is a downside 3/8 from the April low against the May high, but I still like it as an intraday support level. But overall, I don't want to dilute the likelihood, or at least the attainability, if you will, of 295.18. Holding below 331.61, we mentioned how 3 to 5 day swing traders may play the short side back into the 295.18 level or formation as it rises through time. 309.31 today can contain intraday selling pressure, and once tested, we could stabilize. I don't know about swing all the way back to 331.61 intraday, but it's certainly possible. If we close below 309.31, 295.18 rising into a later week becomes our next quick objective, probably on Friday. And if we close below 309.31, 295.18 is likely again on Friday, where we could bottom out through next week, and from here round up within 1 to 2 weeks back into the low 350s. Whether we can expect the low 350s within 3 to 5 days, as I've been saying now for the last couple of weeks, would be a settlement above 331.61. So closing above that 5/8 at 331.61, and if you've been short or are short term, which is to say back down to 295.18, if that is your goal, and I think it's a good one, I think it's a good trade. It's just that if we close above 331.61, you have to be nimble on your feet, not only exit a short position, but reverse and go long for the next few days into the low 350s. Solid 20-point move here, and where once again we can top out through July and fall away again back to the channel bottom. It really is a battle between these 2 points that I see as the defining move as we move well into the third quarter. Check us out at wickedstocks.com. You get a 5-day free trial up front. You also get weekly Apple stock, daily Triple Q, daily SPY, weekly S&P 500, weekly NASDAQ 100 analysis, and 2 stock picks every week. You can see that all by going to wickedstocks.com.